through Tesla and other tech stocks here higher this morning off of that, fueling a comeback for the S&P and the NASDAQ. With earnings season now officially in full focus, we are at a stage where the market is starting to broaden out and become a little bit more stock specific for momentum. At least that's what our next guest is saying. Right here we have Fabiana Fedeli, Chief Investment Officer for M&G's Equity, Multi-Asset and Sustainability Division. Fabiana, thank you for being here with us this morning. It's so interesting to have you here because in the beginning of the year, it was all about index funds, buying this market rally as broadly as you could. And now you're saying that it might be more of a stock picker's market. Explain.
Good morning. Yes, well, if you look at what happened last year with the market, it was all about the Magnificent Seven. But if you look at what is happening this year, none of those Magnificent Sevens are making it in the top 10 of the world best performing stocks. And their size is so huge that even small outperformance is actually moving the index back with them. And this is what is happening right now. If you're looking year to date and also month to date, the S&P 500 is actually behind some of the largest indices in the world. It's behind the Eurostoxx 50, it's even behind China. So we really need to start looking at stocks on a more stock-by-stock level. And there is a lot of interesting stuff out there.
Where does that leave the Mag 7 names?
Look, some of them still make a lot of sense as investments, but they're just not one block. And you really have to start thinking about it on a stock-by-stock basis. If there's one thing that this earnings season is starting to show, we're very early days, right? But it's showing us exactly the same as the past two early seasons have, which is stocks that are even in the same sector with very similar drivers, they're actually performing very differently. And this is because they have better product innovation, they have better cost control, ultimately they have better management. And you'll see this also among the Magnificent Seven.
So Fabiana, talking a little bit more about that, I'm not asking you to pick specific stocks, but in terms of the trends, I mean, you're saying you can't just buy the Mag 7, but is it on a valuation basis? Is it what the focus is for the company, certain AI plays? What is it that you're finding maybe more attractive in terms of an opportunity there for investors than others at this point?
Sure. So right now, it's all about expectations. Some valuations are high, but it might have actually expectations that will be met. But if you look at what is happening with the earnings season, and by the way, don't only look at the US, we had some earnings, for example, in India that are telling us something about what is happening with the US tech market. Some of the legacy IT spending is not doing well at all. AI-related IT spending is doing much better. You see this from the earnings calls of Infosys, for example, but also Accenture. So if you are looking at which companies to invest in when they're linked to AI, make sure they don't have a legacy business that is actually bringing them down, because we're at the juncture point where AI might not be able to offset the drawdown of the legacy business.
Well, it's a great point to look global, and I've been thinking about the reaction that we saw to TSMC's earnings. They beat expectations, and then the stock was down 10, 15% that day. And then we have Tesla giving us sort of an empty promise, and they're up over 15% the last time I checked here. So Fabiana, just help me explain the thinking. Like, what thesis am I supposed to take out of that?
You know, this is really not a good time either to be an index investor and no to try to time the market in a short term. Some of the trends are going to be visible on a longer term. The reaction to earnings are really based on expectations, and small twists in those expectations are going to really have outsized movements in the share price. So if you like something, buy it. If you don't like it, stay away, because the fact that there is short-term price momentum is not a guarantee that it's going to last for the rest of the earnings season.
I love this soundbite. Not a good time, Fabiana. I appreciate that. But for our audience of retail investors, what's the single biggest thing that they should be thinking about when they are trying to select what there might be a good area for a little bit of an edge to get into?
Look, think beyond sectors. Think about themes. Think about themes that are going to be around no matter what happens to the economy, no matter what happens to politics for the next 10 years. One of them is infrastructure. You see a lot of capital going in. Governments putting capital in, companies are putting capital in. The other one is innovation. Innovation includes AI, but you had a segment early on talking about innovation in healthcare. And last but not least is energy transition. I mean, the world is changing, the way is dealing with energy, whether we want it or not.
All right, Fabiana, we got to leave it there, but thank you so much for joining us. That was Fabiana Fedeli, Chief Investment Officer for M&G's Equity, Multi-Asset, and Sustainability Division, with a great point there on innovation. I think that's what's driving this Tesla move today.